Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets today, and hopefully you had a very beautiful, relaxing weekend as well. And in today's action, the S&P up 1.5 and the Qs up 2.5, a beautiful bounce from the Friday lows, as we did clear up a few different elements of the bearish thesis that's been plaguing the market as of recently. Number one piece of news that helped kind of alleviate some pressure Friday into today as well was this one right here. We know that the rate cut odds had been plummeting over the past few weeks as some Federal Reserve members were kind of on the fence whether or not they were going to cut rates, or rather to vote to cut rates in the month of December. Well, we have some further guidance from more Fed members. We know that the Fed's been very divided recently, so any positive comments that can help boost the rate cut odds in December definitely will be welcomed by the market. Number one was, of course, when one of the Fed members, Mr. Williams, commenting last Friday during a speech that he thought that indeed the Fed should be cutting rates in the month of December, which, if you watched the Sunday video yesterday, really took these rate cut odds from where they were last week at a very low 40% mark all the way up to about 72%. Now, that did get a bit better today as well, when we this time had federal member Waller coming out and saying that the December cut indeed as well would possibly be appropriate, but that the January action would be more uncertain. So, of course, the market liked these last two comments because that was a big part of the recent bearish thesis. The fact that the December rate cut was now kind of up in the air as to whether or not it would happen. And the reason for that, of course, was because of the government shutdown and the lack of clear data during that time, such as the CPI reports and the non-farm payrolls reports as well. But now with these two Fed members commenting that, yeah, they're joining Team Cut, well, that is going to be helping the markets, of course. In other news today, we had a bunch of tech news. This one right here, Trump signing an executive order launching the AI initiative being compared to the Manhattan Project, calling it the Genesis mission overall for AI. Now, this is very interesting. It came in after the market close, and essentially what it is, it's steps to expand computational resources, increase access to vast federal data sets, and move towards impactful real-world applications, particularly in scientific fields. The Genesis mission will dramatically accelerate scientific discovery, strengthen national security, secure energy dominance, enhance workforce productivity, and multiply the return on taxpayer investment into research and development. So, all of the data compiled by all of the various government agencies over the last number of years, guys, will now be used, right, to try and better all of those things that we just described. That's a very interesting project. Finally, the government taking a step forward, well, another step forward in terms of AI, because we know this administration has been pushing AI a lot with its investments, indirect investments into some semiconductor companies such as Intel, obviously the critical resources trade, right? Critical minerals trade, and now making a further push into AI, and obviously showing a lot of manufacturing, whether that's with TSMC or foreign direct investments into the United States by other countries. This is just your latest development in the AI trade, which is being favored by the current administration. In other news today as well, another Trump headline. We got Trump speaking with President Xi, saying the phone call went very well. Sounds familiar, right? All the phone calls go very well, but this was good, kind of agreeing to meet again in person, to where President Trump was going to travel to China, possibly next April, and President Xi would be visiting the United States as well. It's been a long time since that's happened, of course, but this news did help alleviate some of the, lasting fears or lasting worries surrounding that relationship between the United States and China. So that was another good piece of news, which did help keep the market rally going today. And then we had a whole bunch of tech headlines right here. Google. Cloud landed a multi-million-dollar contract with NATO's Communication and Information Agency to provide a sovereign air-gapped version of Google Distributed Cloud. That partnership really helped lift Google today, guys. Google was once again on a massive tear. The stock up 6.28%, and another 2.25% in the after hours because of this piece of news right here that came out in the after hours. Meta is now in advanced talks to spend billions of dollars on Google TPUs, which they're not graphics units like NVIDIA puts out. They're the custom silicon chips that a lot of big tech firms have been working on. Meta's been working on their own, Amazon's been working on their own, and Google's been working on their own and having very good success with the release of the Gemini 3 model just last week, which people seem to be liking a lot, which is one of the reasons why Google has been on an absolute tear recently And that news about their partnership with NATO, and that news that Meta was willing to also spend on, it's funny because Meta's developing their own custom silicon chips, but now also probably interested in Google's as well. That brought NVIDIA down, but it did bring in Google up in the after hours as well. And Google's been one of the market leaders in terms of AI recently. Funny, it's very ironic, right? The company that was supposed to be disrupted and killed by ChatGPT is now on the other side of that. They're now the ones disrupting the industry, and now everybody wants to partner with them. So it's just very ironic how that works. Good thing for you guys on the channel. You guys were probably following me, or maybe not, but we were accumulating a whole bunch of Google Leap call options down here and Google shares. So congratulations to all Google shareholders. You guys are now crushing it. And the last piece of news right here during the day, Amazon saying it was going to invest $50 billion to expand AI and supercomputing capacity for US government customers, adding 1.3 gigawatts of compute across AWS top secret and government cloud regions. Very strong construction expected to begin in 2026. So a lot of very bullish tech headlines today, and the comments from some Federal Reserve members over the past 2 days have really helped alleviate a lot of the pressure across those two narratives. The two narratives that have been bringing down the markets over the past few weeks. Number one, it all kind of started with AI, a little bit of AI exhaustion, right? A little bit of running ahead of what maybe some companies would be worth in the current market. And that was kind of led down by some of the neo cloud providers and other names which have been roaring back today. And also some of the liquidations that we were seeing in crypto, which kind of soured the sentiment in the equities market as well. That was leg number one. Leg number two down, I'll remind you, was caused largely by the government reopening right about there and saying the October data may just be lost forever. And as a result, the Fed may not have enough information to cut rates in December, which caused the rate cut odds to plummet and the markets to kind of plummet as well. Those were two phases of the sell-off. So now that we have better, more bullish headlines on AI, especially we got NVIDIA earnings as well, which were fantastic. And now that we have a bit more clarity on potentially the rate cut in December, well, now you can see the market bounce, right? So that's why we always compare and contrast your short-term bearish narratives, because we want to understand what's going to solve these bearish narratives. And when they are solved, that's what usually helps alleviate some pressure on the markets. But we always need to remember all our bullish tailwinds as well. I've been bringing up this list here, guys, for the past 3 weeks. Hopefully you guys have been able to make good use of it. So that's it for your introduction in terms of all the news and things that move the market today, the narratives, the sentiment, the headlines, and everything in between. In the rest of today's video, we're going to do a few things together because there's a lot to talk about. Haven't seen you guys since Thursday for these daily market recaps. So number one, we'll go through the indexes. Take a look at where we stand in terms of our rotation across our various indexes right here. And additionally, take a look at some momentum indicators, because we know the markets have been stuck here in extreme fear. A lot of market breadth got crushed. A lot of momentum got absolutely crushed. Where do we stand right now that we've made some decent work into the big Thursday day sell-off candle? We'll take a look at the indexes and the rotation and determine where we can place some good bids in this market. Thereafter, we will do the same thing across our big tech names, because we know a lot of these big tech names have come down significantly over the past 2-3 weeks. So are there any opportunities for some swing trades or some long-term portfolio adds? We'll let you guys know when we run through this list right here. And at the end of the video, we'll be taking a look at everybody's favorite section, the biggest gainers and losers of the day. There was a lot of stocks up today, 10, 15, 20%. A lot of these stocks got absolutely destroyed in the past few weeks. Nice to see them come back now that the market has a bit more clarity. And then there were some names kind of trailing to the downside. Still some consumer discretionary names, a few healthcare names. So we'll take a look at some names to the downside and let you guys know whether or not I'm interested in actually playing them. And at the very, very end of the video, if we have some time, I'll be taking you guys through a portfolio recap, because we haven't done that in a minute together. Last week was all about just talking about the market and pulling up so many different charts, determining the bull, the bear case scenarios, etc. So now that we have a bit more leeway in terms of time, I'll be giving you guys a rundown of the portfolio. But if I don't have time, since you guys know I straight shot these, right? I don't know how long the video is going to be, but if it's too long, I'll just do the portfolio recap tomorrow. But today we're definitely going to spend a lot of time on the charts because we have a nice big bounce underway, right? So that being said, that's everything for today's video. Let's jump right into it. The S&P up 1.5, the Q's up 2.5. Take a look at the heat map. Looks a lot better, right? Although consumer defensives were a bit left behind today, big tech coming back in a roaring fashion, which is very good. The bottom half of the market here, financials, not too bad of a day, but I wouldn't call this an extremely bullish day. Healthcare just kind of still moving along higher here. This one has been one of your lead bulls throughout the most recent correction in the last 2 weeks, and they just keep going. Very strong move by healthcare there. And the bottom half of the market still remains a little bit mixed. So your breadth is not amazing right now, but it is getting better in relation to some of the lows that we saw last week. Into the one-day relative performance, you can see that even better to where most of the market was higher today, except for energy and defensives. Over the last 1 week, however, the damage is still felt in the, you can still feel the damage essentially, right? To where half of the market is performing well. Communication services is your lead performer. I'll remind you that is largely Google. Meta, shout out to them, but they haven't been performing too well, but a nice 3% day by them today. Healthcare, and then the half of the market, right? And to the downside, energy and still technology. Yes, even after these bounces, technology by large and by far is still fairly choppy. And on your 1 month relative, the damage has definitely been done so far. You can see we are getting better in terms of breadth. You remember when I showed this about a week and a half ago? Every sector was red on a month-over-month comparison. We are now getting incrementally better as the days move on, but there's still a lot of work to do for the bulls. Now, in terms of your momentum indicators, obviously we have fear and greed still down here into 14, which does mean that it does represent a decent buying opportunity, in my humble opinion, for some long-term portfolio positions in your favorite companies, but also possibly some longer-dated leap call options on some of our favorite names as well. Right? And just overall positioning should have a bullish leaning bias right now that we've gone through a pretty decent correction with very low market breadth. And I'll show you a few more indicators of momentum, right? This one right here, your McClellan Oscillator Index, also another gauge of momentum. We clipped into oversold conditions. And if you tell by this chart right here, when we get that oversold, usually it tends to be a good buying opportunity. It doesn't mean that that's going to be the absolute bottom and that we can't go a little bit further, but it means we should start deploying some capital. You might remember a few weeks ago, I filmed a almost 2-hour video letting you guys know I was going to really take it off the table in terms of buying power, wind down a lot of the profitable swing trades, and then just wait till we get some extreme fear or possibly some big oversold conditions in terms of momentum. We now have them. So now I've been building some further positions back during the Thursday session and the Friday session as well. That being said, we also have another indicator of momentum here, which is your Zweig breadth and thrust indicator. And whenever this one gets this deeply oversold, let me move myself over. This one as well, whenever it gets this oversold, it doesn't mean it can't go for more, but it means that we should start deploying some capital that we've been kind of saving on the sidelines overall. So if we take a look additionally at our last momentum indicators, the breadth of the market, you will see that the percentage of stocks above their 20-day EMA exactly came to the bottom we were talking about on Thursday and also, coming into Friday as well, to where when the percentage of stocks gets so low, only 26% of all stocks above their 20-day moving average. Yes, we can drop further, but this is the buy location. You can zoom it out over the last 20 years. It's always synonymous with a buying opportunity. Percentage of stocks above their 50-day EMA, same concept. Into Thursday's action, we were only at 30% of all stocks above their 50-day EMA. It can go lower, but obviously it does represent a buying opportunity. You want to be pivoting from being greedy sometimes to, from taking some chips off the table when it's up here. And now that we had the indication that we were oversold on a lot of stuff, not only the momentum indicators, but on the breadth, that is when you would like to position in some of your favorite companies. I mean, even big tech guys, a lot of big tech names were down like 15, 20% from the recent highs. I mean, if you can't buy big tech when they're down that much, what can you actually buy, right? I get the environment was cloudy. At the end of the day, though, what changed in terms of those companies' fundamentals? Absolutely nothing, right? Moving on to the percentage of stocks above their 200-day EMA, we're still right now at a 51% read, so 51% of all stocks above their 200-day moving average. Not too bad, but you can see that the damage has been done over the past few weeks. So essentially what this means is that short term, a lot of stocks are oversold. The 20 and the 50 give you short-term oversold indicators. The percentage of stocks above the 200 tells you if the overall market is still healthy, right? Are we possibly in a big bear market like you see sometimes during tariffs or during the late fall of 2023 sell-off when you pull back 10+% from the SPY? Or is it just short-term gains consolidating? And it was pretty much the latter, essentially, which is what we've been describing over the past 2 weeks. The fact that you had short-term bearish catalysts, but the long-term fundamentals of the market were still solid. You had a lot of companies that ran very hot September and October, and we needed some pullbacks. We needed to also flush the margin out of the system, right? Possibly get retail traders back on their heels because everybody was way too aggressive. and that damage has been done. People's sentiment was shifted, and you saw it last week when this fear and greed index clipped into the 5 to 6 range, which is very, very rare. The last time we saw that was during tariffs. So hopefully you guys are able to, use these videos and make sense of the noise and start deploying. I'm not saying go all in, but at least start deploying on some of your favorite names, because we were saying, although the bearish narratives right now are strong and the markets can fall a bit further, that the long-term bullish tailwinds are indeed intact, and we should be using these short-term sell-offs to accumulate some positions in our favorite names. I'm not saying play the big volatility names. No. I'm saying playing the same legacy names that you guys are used to, that we always talk about on the channel, names in this big tech list overall. And I also put together a list for you guys, last Monday type of thing, to where I gave you guys 20 different stocks, some core positions and some growth positions that I was kind of going into progressively over the last week of trading. And suffice to say that those buys now, for now at least, are currently paying off. So that's everything for your overall market intro. Now, if we take a look at the actual technicals of the S&P, well, still in the context of a daily downtrend. However, now we have a very nice bounce. This bounce from the Thursday top, which is your lower high, to right now is a 78% bounce. However, we know that a bounce without a confirmation of a trend change is only that. It's a bounce in the context of a daily downtrend. And we already had a 78% bounce. This one, and you can see they unwound it after the government reopening, right? So what we need to see right now is either a fully engulfing move, recapture Thursday's highs, break back above resistance, 674 down to 667, right? Need to see the engulfing move, the breakout, the retest, and the trend change, or do it from here. If we reject from resistance, give me a higher low, get the daily trend change back, and only then will you know that your weekly lows are set. You need the daily uptrend to confirm that your weekly consolidation period is over. We are now into the second week of bearish MACD momentum. That doesn't mean the markets have to do like this, right? I'll show you tons of times in the past whereby you cross in a bearish fashion and momentum is just worse off because it's a relative measure. Momentum is just worse off than it was back here. It doesn't mean the markets have to fall off a cliff. It just means that you might go into a bit of a choppy area, and you can see so many other examples of this in times where, you move up for a while here and then your MACD kind of crosses, you end up with a bit of a bearish period, but look how long it lags for. By the time you're back to new all-time highs, the MACD is still red, right? So it's just something you have to pay attention to, the fact that you can have your foot fully on the gas during these periods, because you know that momentum is shifting and that it may take a while, right? We haven't had many of these weekly consolidation phases since the month of April. So when you lose the daily uptrend and the weekly retracements here go pretty deep, you know that, okay, it is time to buy a little bit, but we can't be going all in. We got to be very patient and wait for our trends to be recaptured. When you have clearly defined trends and you recapture some of these moving averages and some of the support levels, it's much easier to position for some follow through rather than guessing. Is this the bottom? Is this the bottom? Is this the bottom, right? Wait for the price action to show you, right? Don't predict, man. Just kind of react to the price action. Moving on to the QQQs right now, same concept. Daily downtrend, nice bounce though. Take a look at the size of the bounce right now. It is currently a 786 bounce, which is a great size bounce. Gives the bulls a lot of space. But we also had a very nice bounce back here, and we rolled that one over anyways, right? So until the trend is changed, it's very tough to me to say, yeah, that's the absolute bottom, right? You could go for the engulfing breakout retest move and change the trend there, or you could do the good old two-step process in setting up a higher low for possible a further trend or a trend change in the markets, which would put an end to your weekly consolidation. It's been nice weekly consolidation, right? We lost the uptrend on the weekly. That is for sure. We lost it by flushing these lows. Now the bulls are going to have to work hard to get it back, right? Either a one V shape and then set it up here, or the two-step process. So it may just be a little bit choppy. I'll remind you, we are still in bearish momentum territory. You could tell that, right? Just from all these charts that I showed you. This is still oversold. This one right here, the Zweig, is still oversold as well. Your fear and greed index is still in extreme fear. So can we position slightly? Yes. But can we say, yeah, that's the absolute bottom? I'm going YOLO. I mean, if you guys want to, right? But I'm rather patient. I would rather be late, but have confirmation than be early and be wrong and be trapped and be out of buying power. That's just how I trade. But so far, it does look pretty good. The bulls have created a lot of space again to change this trend. And at least now we know that we've alleviated some pressures, some recent pressures, right? The AI bubble and the fact the market's overvalued. Well, when we get more of these headlines from the Trump administration, when we get very beautiful NVIDIA earnings, it helps relieve some of that pressure right there, right? Additionally, in terms of the rate cut odds, from the government shutdown and the possible impending data dump, right? And the fact that we had bullish non-farm payrolls just last week, it helps alleviate some of that pressure. So you can say that although the markets are not clear right now, are they more clear than they were possibly at this same time last week? The answer is yes, right? You have a bit more clarity on your rate cut odds, a little bit more clarity from the AI trade by NVIDIA reiterating massive demand. So you do have a bit more clarity. I'm not saying that it's picture perfect blue sky clarity, but relative to where we were, it's a little bit better. Taking a look at the XLF right now, financials, you're going to need some participation, man. You need more aspects of the market participating. It cannot be big tech. Only big tech. That's how we got into these problems in the first place, through too much concentration and not enough market breadth. So you need financials to kind of come back right now. Unfortunately, they unwound their attempt at the daily upturn right here, unwound it completely, and now the bulls have to start from scratch, right? Lower high, equal lows, and now give me a break above Thursday's high. All right, then you got the daily uptrend going, and you might be able to get a bit of a weekly swing. It's a weekly downtrend into support right now, 52 down to 50. As a result, you're still into monthly consolidation. Now, that doesn't mean that we can't play. It just means that we're in an accumulation phase for this ETF. You remember kind of the same thing as healthcare was when it was down there? Financials is kind of the same thing. It's an accumulation phase. It has been an accumulation phase, arguably, since the months of June. JP Morgan and some of the banks had to pull back a little bit. They were a bit overbought on the monthlies. They're pulling back a little bit, right? Other names, though, are very nice right now. I've been talking about Visa. I've been talking about MasterCard. I've been talking about SPGI, talking about Moody's as well. You don't need to look too far to find some phenomenal opportunities in financials that have been consolidating all year. Moody's consolidating all year. SPGI all year. Visa consolidating almost all year. And MasterCard consolidating almost all year as well. So possibly some nice opportunities in some of the very high quality financials names. Moving on to healthcare right now. Healthcare, absolute runner right now on healthcare. Very, very, very solid right now. New leg to the daily uptrend. Higher lows are here, 151. Any move lower, looking for a higher low for further trend continuation. It's a little bit daily overbought, I will admit, with a bit of divergence here, right? Highs, lower highs on the RSI, higher highs on the price. So maybe the bulls might be getting a bit tired soon as we are clipping in to some of the all-time high locations. Phenomenal trade, man. We were in this trade back here. Take profit number 1 on those call options was there. Take profit number 2 has now been achieved. Very solid move on healthcare. Weekly uptrend is also quite strong, but now a little bit extended. So if we get a pullback, it would just be very normal price action. Healthcare, super strong. And shout out to Eli Lilly, man. Eli Lilly, the first healthcare company to reach $1 trillion in market cap. We were talking about this trade here. Break of the uptrending channel, recapture the moving averages, the breakout, the retest into our support range as well. Phenomenal entry. If some of you guys took that, man, hopefully you guys made some decent money on that one too. Moving on to semiconductors right now. Semiconductors trying their best, right? But similar to the SPY and the Qs, it is still a daily downtrend. Thursday's high is the mark. Now we do have a nice bounce underway right now, a between 618 and 782 bounce. That's good, but a bounce is only a bounce until you change the trend. So that's what the bulls have to do and protect these lows overall. Nice consolidation on semiconductors though, top to bottom. That was like 15%. Doesn't seem like it, but it happened relatively fast, right? In that same time frame, we have been consolidating this weekly time frame into the 12 EMA, bearish MACD cross, which doesn't mean we have to go like this. No. It just means it might just be a little bit choppy to regain that same momentum that we had back here. Overall, though, we are still looking for a bit of a monthly consolidation phase. In this one right now, we were monthly overbought. So maybe semiconductors are going to be somewhat choppy moving forward, but still, right? It is still a nice trade to look at some names individually, some names that maybe have pulled back a lot, some names that maybe have been consolidating. You don't need to look too far, man. AMD was pulling down into 200. We were waiting for that area for a while, and it was the time to start accumulating as it went from 200 down to support. Decent trade down there. NVIDIA also has been doing nothing for months and months and months. That one's pulled back as well. So if you're only waiting for pullbacks on Micron type of thing, right? Micron had a nice pullback, but there are several semiconductor names out there. You don't need to look too far to find some pretty good opportunities in terms of fundamentals and in terms of technical pullbacks as well. Moving on lastly to the Russell up 1.83%. Nice move on the Russell, but still in the context of a daily downtrend. This one, though, engulfing, right? Nice engulfing move coming into resistance, 240 down to 237. Nice engulfing move. So now they have to change the trend, right? You got the 100% engulfer right there. Give me a nice trend change. Then we can say our weekly lows are probably set. Now, that being said, we did lose the weekly uptrend, right? It is a loss, so they will have to get this one back. Traditionally, when you lose the weekly, the V shape like this is somewhat unlikely. If anything, they may have to do it in 2 stages. But what it did do is it gave us a nice little backtest opportunity of support down there, which was previous resistance from the highs. Sorry, I got the dividends on right here. Adjusting from the highs, right? Previous resistance, current support. Nice little backtest. Nice to see the Russell pulling back into those frames right there. So everything not too bad looking overall in the markets. Some of your other minor sectors are still somewhat soft. I do think there's some nice value in consumer defensives right now. We are coming into previous resistance, which is now support, multi-year worth of support there for value. Value's just been out of favor so much this year, man, guys. So much. I do think it will kind of be like a healthcare trade, whereby if we're accumulating some positions, it's not for everybody. It's not the sexiest trade, right? But if you want to kind of hedge some of your tech bets with some staples, not too bad. I think the rally is definitely coming as the market broadens out. Moving on to utilities right now. Utilities is a very strong sector, right? It has been consolidating for a while, daily downtrends into weekly consolidations into the 12 EMA, and additionally a little bit of monthly consolidation sideways action as well. Not that big of a pullback, but still some of the names that we were looking at frequently were Vistra coming into a very nice level right here, previous resistance, current support for the markets, nice monthly higher lows being established around that 12 EMA, which we were saying was be a nice opportunity on the channel. Duke Energy as well. A lot of these utilities names, strong utilities names, man, pulling back into relevant support areas. Duke Energy, you can look at some names like Next Era Energy as well, consolidating here in its own range, looking possibly for the bull flag breakout on the weekly, right? Monthly is not too extended. We can go a little bit more. Overall, though, guys, just looking to kind of expand on this monthly leg higher on Next Era. So a lot of these energy names are set up pretty well. Even names like GE Vernova, although it's not utilities, pull back, right? Decent monthly consolidation, sideways for the past 4 or 5 months, even though all their turbines are sold off for the next 3 to 4 years, or they're sold out pretty much, right, in terms of their backlog of production. So there's some decent names across some of the utilities / data center utilities, et cetera, et cetera. Real estate remains a somewhat muted trade, obviously, because the rate cut odds plummeted through the floor, right? But real estate is not too bad. There are some plays that make sense, such as the mortgage companies, consolidation. We were talking about this the last few weeks. Nice monthly consolidation on some of these, right? They ran a ton, they pulled back a ton into some casual moving averages here and some support ranges. We're looking at Rocket. Rocket was a nice opportunity down there, and even maybe some of the home builders trades if this is your niche. If you know a lot about it, if you want to participate, beautiful monthly retest here of your support range, possibly looking for some expansion into 2026. So there's a lot of themes that you can play. I'm not telling you guys which ones to play. I'm just giving you guys the most amount of ideas to fit with your own investor profiles. Moving on to the VIX right now. Well, when the VIX was high, it was time to buy. And we talked about that last Thursday as well, that whenever the VIX is this high, it's a great opportunity to be selling some short puts in the markets on your favorite names, or nibbling, right? When you see the VIX high, extreme fear reads right here. You see, like we posted last week, the most amount of put options bought in recent memory. You see a lot of your momentum indicators down, breadth in the market down as well, and just overall sentiment sour, right? It's time to buy, man. There's just no other way to say it, right? Other than you guys think we're going to get another tariff round? No, we're coming down here to mid 20s, mid to high 20s. It usually always is a buying opportunity. Doesn't mean it's going to stop there, but this is when you have to start repositioning if ever you were taking stuff off the table. Upon my non-financial advice guidance up here, well, I was also saying that, last week was a pretty good time to start positioning here, even if we were losing some trends and you could have gone a little bit lower, guys. It's time to start accumulating. Nobody's trying, on this channel at least, I'm not trying to pick the absolute bottom. I'm just trying to identify zones where it's good to start taking some stuff off the table. We started noticing that during the month of October. The whole month of October was super concentrated. Only AI, the rest of everything was faltering and it could not last that long. I started tapering back on the buying power. But when we start getting several oversold indicators on fear and greed, on some of your momentum indicators, on market breadth, et cetera, et cetera, et cetera, well, there's an area in which we want to position, right? And there's an area in terms of where we want to remove some positioning from the markets. Nobody's trying to clip an absolute top here or an absolute bottom. I'll never say that on the channel, guys. You got to just think in terms of zones and in terms of just overall sentiment and just momentum indicators and breadth, right? It's a range. It's a range of where we position long and a range where we kind of start taking profit on some of our favorite names when they run ridiculously hot for some swing trades and or otherwise, right? Moving on to our gold trade here. So gold right now had a really good day on the Monday session, right? Up 1.7. They're looking to kind of reestablish this as a bit of a long swing trade long here in terms of a weekly momentum as well. So we know we had the weekly uptrend. It came down, consolidated for a little bit. You might just be looking for a further swing trade long. And there's two ways to place this stop loss, guys, because they kind of hesitated here. We wanted to go for just the classic back test and then run, but it gave us kind of like a little bit of a bull, a little bit of a bull flag right here, just testing these lows and trying to go for it. If we're an aggressive bull, we would set a stop loss down there for a swing trade long, and the take profit would be probably on the weekly time frame because you're looking for weekly trend expansion, right? You can use a shorter stop loss, or where we were commenting on just last week around these lows, you would have used the wider stop loss below there to invalidate the entire weekly trade overall for a weekly downtrend, right? As of right now, to position towards those highs, it's tough, man, to use that lower stop loss because you're a little bit late, and I'll show you the risk to reward, right? The risk to reward now, if you use the big stop loss, risk to reward is somewhat equidistant to the previous highs. To 4,500 psychological, it still makes a bit of sense, but you never want to stretch your levels, right? If you're level to level trading, then it should be maybe the daily lows right there. And then you go for these weekly highs overall. That's still close to a 2-to-1. The entry is still decent, right? For a long, the bulls are not looking too bad, but it might just be a bit choppy, man. Gold, I mean, they've tried to break out, haven't been able to do that. You still have a bullish leaning bias because of the weekly uptrend and because the monthlies still haven't rolled over despite being overbought right here. But that's why you want to trade with a stop loss, guys, because if they roll over, they can roll this into a weekly downtrend and into monthly consolidation. So trade gold with a stop loss. It is a bullish leaning bias trade for now, because that's what the time frames show. But if the price action changes, you do not want to be caught with your pants down. So keep that in mind. Moving on to some of our crypto names. So Bitcoin and Ethereum having some bounces, right? But we know the context is still this massive, big, sweeping downtrend. Tons of crypto liquidations. Tom Lee came on CNBC last week. He was talking about a glitch in the crypto matrix. Some market makers playing some gains, liquidating a lot of leveraged longs, some problems with the stable coins, and it just led to a cascading effect. Some of the ripple effects from October the 10th are still being felt, apparently. I mean, that's what they're saying, right? Apparently. But we also know crypto is a very sentiment-driven trade. You can go on crypto Twitter, and a bunch of people are calling for, the start of crypto winter, the end of the 4-year cycle. So all this together adds to more and more and more selling pressure. As a result, you hit daily oversold conditions on Bitcoin. Now, to be honest with you guys, you are going to need a hell of a bounce. A hell of a bounce by the bulls to get me a daily trend change, recapture above support, 93 down to 88, because you just invalidated a big support level, right? You came down and clean cut this overall level, which we've held, and the retracement size is quite massive, guys. This is what you don't really want to see on Bitcoin, right? A over 786 retracement. That is too large, right? That being said, it doesn't mean that we're cooked right now and that we can't recover, but is it going to be a V-shape, massive momentum recovery? Maybe not at this stage. The retracement size is too deep to say that that is the likely scenario. It can happen because this is always a game of probabilities, right? However, the more likely scenario is a more progressive and gradual recovery of this possible monthly time frame overall. The bulls are still in control of the long-term time frames, and as long as the equities market has a bullish leaning bias, you would expect that to carry into crypto, but I don't think many people were expecting, right, since the early stage of October, for Bitcoin to go down on 35% without a recession, without a bear market or anything like that. That was a very big move. There was some problem with some internals in Bitcoin, so it's very tough to say that, yeah, that's the bottom and to just go for some swing trade longs. If you guys are feeling that way, I mean, you got to put a stop loss down below these because you're taking a bet that that's your weekly lows. If you're wrong, well, you're coming all the way back down here, 74 to about 66,000. I'm not saying it's going down there, but that is your risk when you're looking at this style of trade. So keep that in mind. Ethereum, same concept. They got unwound because of all the factors we just described. Big sweeping daily downtrend, oversold conditions as well on the chart. The bulls are going to need a heck of a big bounce, guys, a really big bounce to reset the daily time frame, recapture this support area, which we let's be honest, we did lose it, right? That being said, 32.70 down about 28.54. This whole range was what the bulls were kind of counting on. Support, resistance area, resistance area, resistance area. So you can move this box around a little bit, you know, up or down 50 bucks, something like that. It doesn't change the fact that this retracement size and weekly downtrend is very pronounced. That is not the price that I wanted to see on Ethereum overall. I did not want them to see breach the 618 retracement, because when you do that, man, you kill so much momentum, right? I'm not saying Ethereum and Bitcoin don't have a good long-term thesis if it's your type of trade. I'm just saying when you kill momentum this hard, it is really tough to V-shape this back as if nothing happened. If anything, you might be looking for a two-stage, more progressive move on a recovery of the price. A good area to be accumulating some longer term positions, right? But if you're looking to swing trade this, expecting just massive stuff like this, man, you might just be a little bit disappointed, as I don't know if we're fully through the crypto drama at the current time, right? That's everything for your overall market rundown. Now let's move into some of our big tech names. So moving first into good old Apple. Apple up 1.63. You know, Apple held up better than most companies during this most recent downturn in the markets. They really never lost the daily uptrend. They came very close, but now nothing. We're still caught in this little bit of a range right here. If you break up to the top, next psychological area to be breaking out towards is going to be the ever so elusive $300. Now, is it a good time to position on Apple up here? Debatable, right? It's a very greedy long right now. The longs would have to be done with a stop loss below your lows, because that invalidates the attempt at the new daily uptrend and would just plunge you into a bit of weekly consolidation, maybe down into the 12 EMA, closer to about the 260 to 250 range. And we know the monthly timeframes are also somewhat extended from the 12. Not my favorite type of play to play the breakout like that, especially not when you have very overbought conditions. And also, when the fundamentals are also not aligned with the current price. Apple is trading rich. They should have a nice Q4. That's what they guided for, but a very greedy long. So I'm not adding any swing trades on Apple up here. I'm also not doing any long-term shares up here. For me, Apple is just a hold at the current time. AMD, a very interesting one. So AMD's come down a lot over the last few weeks, right? From the top to where we are right now, this was nice consolidation, 27%. If you were looking for a discount on AMD, suffice to say, you absolutely got it. That being said, daily downtrend in the control of the bears right now. You're going to need a very big bounce to change this trend around. So far, the bears are still in control right now. We are still in the midst of weekly consolidation. It's a good thing, though. We tapped the good old weekly 12 EMA. So now we're coming actually into some areas of decent price action. Up here, it was a very greedy long. You were super extended, super overbought in the timeframes. But now that you've chilled out a little bit on the price, decent positioning on the monthly time frame as well. You can see we've cooled off a lot of that monthly move, right? We didn't come back down and test support. You came down into your previous all-time high area, but a decent area, and it's always an area, right? We're not trying to pick bottoms. We're trying to pick nice areas where things get accelerated to the downside, right? Names like AMD pull back 27% of their highs, and we want to start kind of bidding, right? When it comes down into a psychological 200 level, down to roughly the 180, if we're looking to accumulate some further swing trade longs, that's where we should do it, right? That being said, I am a fan of buying AMD down here at this current stage now through 180 if we come down into there, because it's a range, obviously, right? And the valuation right now, closer to 200, makes a lot more sense. 32 forward price to earnings under a 1 peg and a 7.5 price to sales. Up here, it was a little bit, it wasn't expensive, but it was starting to get towards the expensive region. Now we are once again trading at a fair valuation, so AMD longs can be positioned for the next 2-3 years. If that's your thesis, I'll remind you, they will be expanding EPS in a massive way and expanding revenue in a massive way as well. So AMD for me is a buy. Now we have a nice technical sell-off. The fundamentals make sense, and as a result, now we have a lineup of technicals and fundamentals. So now I actually want to play, as opposed to Apple, which does not have a nice technical sell-off, nor does it have cheap fundamentals. So that's why I try to teach you guys, try to line up both. And when both are not lined up, try to be patient, because the sell-offs, they always come, they come faster than you expect. And if you don't think AMD is going to provide you another opportunity, just be patient and wait. That's the same thing that people said after this run right here. And we were patiently waiting for a backtest down there of not only your weekly EMAs, but the monthly EMAs. They gave it to us, we positioned with some leaps, and now we're up a whole bunch of money, right? So use these previous examples to your advantage. Moving on to Amazon right now. Amazon up 2.53%, down from the top of its earnings, down here 16%. If we can't buy sell-offs on Amazon of 16%, what can we buy in this market? They literally told us that earnings were a very solid quarter and then gave us extremely solid guidance as well. At 220, you're trading under a 30 forward price to earnings, a 1.4 peg with all lines of businesses firing on full cylinders. Amazon remains a buy for me, even if you round tripped all the earnings gains, even if it may make you feel some type of way, guys, right? Price action is very normal, right? Don't get overly bearish because you keep looking at daily candles and you're like, oh no, something's wrong. What changed on Amazon's business from here to here? Nothing, right? So it's a price action problem, not necessarily a problem with the underlying fundamentals of the business. That being said, we came perfectly into the 200-day EMA, perfectly into support, 218 at about 210, and now we're just kind of hovering. Resistance above 239 down, or 240 down about 230, and the support range, which you just described. You're going to need a lot of action from the bulls to reclaim this daily uptrend because now the short-term bears are in control. It is a weekly consolidation and a bit of monthly healthy pullback as well into your 12 EMA. Amazon is a buy for me several different ways. I'm a fan of leaps right here, 2027, December preferably, and also some shares as well for the long-term portfolio. The more chances Amazon gives us to accumulate here, the more I become very favorable towards this trade overall, because eventually you guys know what happens, right? We accumulate Apple down here, we build the call option positions, then we can't play Apple anymore. We build and accumulate the Google positions down here, then eventually we just can't play Google anymore. We build and accumulate the Microsoft positions in here all of last year, then eventually we can't play Microsoft anymore. Same thing for Netflix. We build the Netflix positions during the tariff sell-offs, then we can't play Netflix anymore. So Amazon as well, in my opinion, will be one that eventually, when it actually comes into nice expansion phases, right? Well, we won't be able to play Amazon anymore, right? We'll be chasing the technicals and we'll be chasing the valuation. So don't chase, accumulate when the market gives it to you, but it's not easy. I get it. It's not easy to accumulate when, you know, the overall sentiment is just a bunch of people that are tired of waiting for possible breakouts, right? It happens, but that's where most of the money is made, man. Moving on to Google, we were just talking about it. Google up 6 and another 2.5 in the after hours tonight. Google, crazy, crazy, crazy price action. The irony of Google is going to be studied into the future, guys. You remember back here, we were talking about Google, and I was getting some pushback in the comment section, people saying, well, ChatGPT is going to kill their search business, right? They're behind on AI, et cetera, et cetera, et cetera. Department of Justice lawsuit going to break up the company. Okay, there's always going to be some risk associated with these trades, but you have to understand, does the reward outweigh the risk? You're never going to find a high quality stock that's sold off that doesn't have any risk to it. That's literally why it's sold off, because it's a riskier environment surrounding that stock than not. But if it's a high quality business, a well-established business that's showing you time and time again that their earnings are crushing it despite what sentiment says, it's a buy. And now all the Google shareholders have been deeply, deeply rewarded. So congratulations, you guys were in with us. We're up like 2x on all the shares we bought back then. Now at 320, now is when you have to have a bit of pause, right? Because now at about 320, 10% higher, well, now we're almost at a 2 peg. Now we're almost at a 34 price to earnings. Down here, it was like closer to like a 1.2 peg. It was closer to like a 15, 16 forward price to earnings. There was a time to buy Google, but now everybody wants Google, right? However, we're very stretched on the technicals, super overbought on the daily and on the weekly timeframes right now. So is it a good time to buy Google up here? For short-term swing trades, it's super greedy, man. Super, super, super greedy longs. It's not my favorite style of trade. Like I said, sometimes it works. We were talking about that trade here. To go for the greedy long, sometimes it works. A lot of other times it doesn't, right? It's not something that you can easily replicate. Going time and time and time again for these greedy trades, just closing your eyes, crossing your fingers, and just buying things that are already overbought, right? Sometimes it works because momentum is hot. A lot of the times you guys might just be disappointed, right? That being said, daily control to the bulls, of course, right now. If we pull back a little bit, you're looking for a higher low, anything above 272, higher low for possible further trend continuation, looking very solid on Google. Weekly uptrend is in full expansion mode right now, very far from the 12 EMA on the weekly and extremely far from the 12 EMA on the monthly as well. And I'll just remind you again and again and again, Google is in a very bullish period of time right now. Everybody wants it. Everybody's willing to pay any price. Nobody wanted it back here, but now everybody wants it, right? That's always how this stuff goes. However, I'll remind you what happens when you get too far away from some 12 EMAs. You can look at AMD, you can look at Microsoft, you can look at Netflix, you can look at a whole host of other names. Eventually the pullbacks do come. So if we're looking to build bigger positions, leap call trades, things like that, I would rather wait until the technicals and the fundamentals line up again. But that's just me. If you guys want a full send Google up here, it's not my money, it is yours. Moving on to Meta right now. Meta down a decent amount from the all-time highs right now. Meta still down 23%. Nice little bounce on Meta right now, but they got a lot of work to do to change the trend, right? Nice daily downtrend by the bears. Now a decent sized bounce on Meta in relation to your most recent lower high. It's a 618 bounce. Not too bad, but a bounce is only a bounce until we can change the trend. You remember I said that here? I said, don't be willing to call Meta the bottom on Meta here. You need to get a daily uptrend going. Well, let's see if they can actually get the daily uptrend going. Bouncing nicely out of the deeper pocket of support, 600 down to about 557. Very nice. Meta is still, well, was still daily oversold conditions. Usually that's a nice buying opportunity. Couple that with the fact that, yeah, it's a weekly downtrend. It is nice monthly retracements down here into the moving averages, which they rarely ever test. Looking for a monthly higher low. It's an accumulation period for Meta, especially if you're a long-term shareholder, right? You're going for some leap call options, leap call debit spreads with 2 years of time, not 3-month call options, not 6-month call options, 2-year call options. I'll never tell you guys to do short-term call options on my channel. It's not a day trading channel. It's not a short-term swing trading channel. No, we go for the big moves, the high conviction moves, things like that, right? It's not that I don't do the other ones, but what I want to get, it's fine to do with a bit of capital, but I want you guys to get in the habit of just establishing conviction and being able to put your money down for high quality stocks and just forgetting about the short-term price action so much, focusing on the long-term business model. And in around the low 600s, Meta is trading around a 24 price to earnings, a 1.6 peg, very decent sell-off for Meta. So this one is a buy for me for longer term call option leaps, longer term, and also for some longer term shares. Moving on to Microsoft right now. Microsoft up about 0.4%. This one too, daily oversold conditions. When the last time Microsoft hit daily oversold? I don't know. Back here, it was close to a bottom. Microsoft as well back here, that was also very close to a bottom. You go back in time as well, daily oversold conditions, that was the bottoms of 2023. So can it go a little bit more oversold? Yeah, but do we want to be accumulating here? Now that I've been literally waiting for this one on the channel for the past 4 or 5 months, I was saying, no, I'm not interested. How many times in the last 4 months have you heard me say, not interested on Microsoft, I'll wait for my good old monthly 12 EMA. Not interested, not interested, not interested. I've been waiting. Oh, now I'm interested, right? So short puts are underway for me right now. Leap call options here and also into the bid area of support 450 down to 430. Yes, now I'm interested. I'm also interested in it for for some additions to some long-term shares. I apologize. I didn't redo the valuation at 470. Just shaved 10% off this price. 30 for price earnings, around a 1.7 peg. Now the valuation on Microsoft is a lot more manageable than it was up here at 560. It is also a very nice pullback from the all-time highs, 15% into the 12 EMA. So is it going to stop here? I don't know, because the short-term bulls are in full control. The short-term bears are in full short-term control. It's daily oversold, yes, but we can easily just do something like this, right? So it's a range. I start to get interested in putting my bets to work in a range, looking for the overall consolidation, and then building for a large phase of expansion, which can take more than a few weeks, right? So I am interested in Microsoft. Take from that what you will. On to Netflix right now, same concept as Microsoft. Over here, I was not interested. How many times did you hear me say, I'll be interested in Netflix from around 110 down to 1,000? We're finally there right now, in or around the 12 EMA, finally touching it. Yes, we don't have the short-term time frames. It's a daily downtrend. We're not daily oversold just yet, so it can go a little bit more. But now is the area where I start to get interested to build my positions, right? Low 100s down into the 90s, which is your next support area, 100 down to about 92. So this is an area, once again, that I want to start accumulating more Netflix shares and leap call contracts in this little pocket as well. It's a very nice sell-off on Netflix from the top to where we are now, 21%, and in around the 105 range, which is where we currently stand. The valuation is more manageable. You remember up here was in the 40s, forward price to earnings, and the peg was closer to 2. Now we're getting a discount. The technicals are lining up with the fundamentals. As a result, I want to position further for the longer duration swings. Onto NVIDIA right now. Same concept arguably as well, right? We had the big pop off by the GTC conference. We gave it all back from those highs. NVIDIA is still down about 15%. To the lows of Friday, we were down about 20, almost 20% at that point in time. And NVIDIA, right, although the daily bears control some of these time frames, daily downtrend right now, we're looking to bounce in support 185 down to about 177. Lower area is 171 to 165. These areas are where I want to be building some positions on NVIDIA. Yes, we sacrificed all the momentum from the weekly time frame. Yes, we are doing a bit of monthly consolidation, but I want to be buying in this pocket, guys, from the mid 170s where we were down about that 160 area, which is your 12 EMA. This is the pocket where I want to be buying. So notice I'm not trying to call tops and bottoms. I'm trying to identify regions where I can build out some swing trades so I don't have to necessarily call the bottoms. I'm playing nice pullbacks on stocks where the fundamentals, it's cheap. We covered after earnings. NVIDIA is cheap down here, yeah? The fundamentals and the technicals are starting to line up more and more and more rather than just doing the FOMO YOLOs up here in the earnings and possibly getting unwound. Moving on to Tesla right now. Tesla up 6.82%. Tesla, strong, decently strong move. Well, we're kind of stuck right now between resistance 430 down about 415 and support 405 down about 383. The bulls are trying, right? Daily downtrend. You're trying to get something going right here, but it's very choppy on Tesla. 6% moves up, 6% moves down. That being said, the weekly time frame provides a bit more clarity. Weekly downtrend, which means monthly consolidation into where? Into the support area that we were looking to backtest a little bit. If you go down a little bit more, you'll be waiting for the 12 EMA to catch up. Decent, right? First positions here, second positions down there. Decent little area if you are a Tesla long-term bull to be building some swing trades a little bit more into this stock. Well, not short-term swing trades, but you know, longer-term positions, whatever you want to you guys want to do with that. Moving on to Palantir. Palantir was another example of something that we were very patiently waiting for. Very patiently waiting for. Up here, not interested, not interested, not interested. However, after they show us another quarterly earnings of insane growth, daily downtrend into a next area of support, 150 down to 140, which we were waiting for a while. Weekly uptrend has been unwound. Decent sell-off on Palantir from the top to the bottom. That's 30% on Palantir, right? And additionally, we started finally coming closer into our 12 EMA. Finally, some monthly consolidation. Finally, cooling down the monthly timeframes as well. Now, I'm not going to say the fundamentals line up with this company because they're still extremely expensive, right? But that being said, if we were looking for a technical pullback, this was the area that we should have been targeting. It's still there. It's still relatively close. It's off those lows right now, but decent area to be monitoring in the near-term future. 150 down about 140. Still a daily downtrend, so the bulls still have to turn this around to be sure that you've found your weekly lows and that you might be looking for a bit more, but decent area to be exploring now for some shares or for some, whatever you guys want to play in terms of longer term leap call debit spreads or things that don't cost too much money. Don't get burned by IV. Moving on to SOFI right now. SOFI up 9% overall. Daily downtrend swing into the lows as well. Clear as day. So now you need your bulls to now they have recaptured a big percentage of this move. Dare I say 80+% at this point without putting the fibs on it. Let's have a look. 80% of the move right there. Not too bad for my first day of trading. Moving on to the daily trend change, which they need to attempt, right? So either engulf, tap resistance, 28 up to 30. Engulf, give me a daily uptrend reset. And then you can say that, yeah, most likely they're not, more likely than not, the weekly lows have been found. The weekly uptrend has also been unwound too, right? So lack of a weekly uptrend right now doesn't mean they can't get it back. Right now, you're just trendless. You don't have a weekly uptrend anymore, but you also don't have a weekly downtrend. Weekly downtrend would be this, right? You're kind of trendless right now, and you are chopping in around these support areas. Here was the best area for SOFI. I've been talking about this range for the past 2-3 months. Hopefully, you guys are able to find some buys in there. 25 down to 22. Classic monthly retest of your previous highs right there. You're looking for a bit of consolidation. We got it. 12 EMA hasn't fully caught up. So if ever SOFI offers more opportunities for some short puts or share accumulation into the area that we've been highlighting for literally the past 2 months, decent area for SOFI overall. And at $27 where we stand right now, not too bad. 1.1 peg and a 7.34 forward price to earnings. Moving on to our two last ones right now, Uber and TSM. Uber down about 0.21%. What did Uber do last week, right? To be down on this day, like 7%. They didn't do anything, right? Nothing wrong with Uber's business, but the overall market brought them down, which means opportunity, right? We were looking for this for a while, man. We were commenting on this area was looking a little bit dicey. You had this formation right there. You had the weekly legs getting smaller and smaller and smaller and rolling over a little bit. And I was saying, oh, if this one breaks and we go for the monthly consolidation, I will be a buyer between the 12 and this area of support, 80 down to 77, low 80s to high 70s is the pocket of accumulation range for Uber right now. Not looking too bad, around 83 where we are right now, low 20s multiple, 1.5 peg, phenomenal earnings, and a technical sell-off, all reasons that I want to play, daily oversold conditions as well. So short puts or share accumulation, not a bad trade. That being said, the bears are in control. We got a lot of work to do to change this trend around, right? But it's a nice area to be looking into Uber because now the technicals and the fundamentals are aligned. And that's the moral that I'm trying to establish for this story for a lot of you guys out there, is try to find some names whereby the technicals and the fundamentals aligned. Usually that's when you have some higher probability trades, especially if you're just going for the larger swings, right? Talking about months of swings and appreciation to the upside, kind of like we found on Google, kind of like we found on a lot of plays over the course of this year so far. By the way, we took a similar trade on Uber when we were back there, and we smashed it back to the previous high. So maybe again, we could take this one long and possibly smash it back to 100. Moving on to TSMC right now. TSMC also bearish leaning bias, right? The daily downtrend, nice bounce, but a bounce is only a bounce until, yes, until you change the trend, right? So you need a trend change right now. And overall, your weekly is still in a bit of a downtrend too, which means that you're in monthly consolidation, healthy monthly consolidation for TSMC. I don't know if they're going to go for the full retracement size right there, but I would be a fan of playing it right down here, 250 to 240. If it doesn't give it to us, right, that's fine. That's fine. At least we're looking out for it. There are so many other names that we just covered that are giving us that exact retracement that we're looking for into the 12 EMA, nicely off the highs, cooling off monthly conditions as well. So TSMC is still in a daily downtrend, still in a weekly downtrend. I'm not willing to call this the bottom, but at least we've done some good work cooling off the time frames, cooling off the weekly, consolidating into the 12 EMA, kind of like we did right here as well. So maybe we just launched here to the new all-time highs and we didn't get the best positioning in terms of retracement sizes, but that's okay. That's perfectly fine, right? In terms of because there's so many other opportunities that are giving that perfect setup, right? Now, that being said, around the 290 range, TSMC is not that expensive in terms of forward price C, in terms of a peg ratio as well, right? So decent nibbles for some longer term shares. But if I'm looking for a phenomenal opportunity to build like some leaps or things like that nature, right? I just think there are names that have a better combination of a technical sell-off and fundamentals lining up at the same time. As a result, I'm not playing TSMC for leaps right now or shorter term swing trades. I'm playing other things that have a better mix of technicals and fundamentals lining up, of which there are many. We just literally covered a whole bunch of them just now, right? So that is everything, but TSMC is still a super strong company. Nothing bad to say. I own it in my long-term portfolio, right? I'm just looking for the confluence, the names that have the most amount of confluence to increase my odds of success. But also a lot of these names, right, have pulled back more than TSMC as well. So maybe the risk reward on those other names is a little bit better. That's everything for your overall market rundown. Hopefully you enjoyed. The video is coming into an hour right now, so I'll try to cover as many of these names as humanly possible. And if I have time at the end of it, I don't want to make an hour and a half video today. So if I have to just cover the portfolio today, or I mean tomorrow or Wednesday perhaps, into the Thanksgiving holiday, I'll do it then. But I kind of want to cut down on the hour 30 long videos and keep them as short as possible, even though they'll always be long, because you guys have said that you enjoyed the long videos, so I'll keep them. But, you know, everything within reason, right? If I could keep it to like an hour 10, I'll do that. So let's start off with the biggest winners of the day, because there's a lot of themes coming back here. So company number one, Oscar Health. Oscar Health had a 22% rally today because President Trump possibly extending the Affordable Health Care Act in terms of the insurance premiums, possibly, right, proposing a 2-year extension. So Oscar Health coming up and a lot of the other health insurance providers coming up. I personally believe a lot of people talk about UNH, Centene Corporation, and other ones. Oscar is probably going to be your fastest horse in this race just because it has such a low market cap. It came down here into support, which was nice. Short puts under here, I wouldn't be opposed to it, or if you're holding some long-term shares, pretty decent. As I said, the next level is up higher. 17 to about 1850 is your next area of resistance, and then up here. So I've been making a lot of short put trades as we come down into support levels. And if you want to take some swing trades into the highs, not a bad proposition if you're only holding long-term trades as well. Moving on to BMNR. I mean, BMNR is just going to move with Ethereum overall, right? They took a lot of damage recently, a ton of damage. I mean, this one, guys, from November 11th, right? This one is down 45%. It doesn't look like much on the chart, right? But it is down 45%. So this one ties into Ethereum. If Ethereum, it's going to be a slow but methodical recovery more than likely, right? So BMNR should only be taken if you guys truly believe in the long-term thesis for the expansion of Ethereum. Tom Lee also bought recently a bunch more Ethereum last week during the sell-off. They now have about 3.2% of total Ethereum supply. The goal is 5. So if you're in this one, you're in it for the long term. Impossible to call a bottom on BMNR if you don't have a true bottom established on ETH. And as I said, that'll only come when you recapture the trends. Moving on to other names, this entire niche right here, CIFR, Iris Energy, right? NBIS, CoreWeave. So my humble suggestion is to pick your favorite horse in that race. A lot of people just diversify and just try to take all of them, right? No, you need to learn more about these plays, right? If you're only trying to take the shotgun approach as opposed to picking your favorite name, while you may have a lot of broader gains, right? Or in terms of broader losses, right? But you may as well do some research into which ones you actually like the most. My preferred name in this sector is Iris Energy, only due to their vertical integration. A lot of the other names outsource the building of their data centers. Well, I mean, construction companies are going to build them, right? But essentially, a lot of these other companies like NBIS doesn't own all of their data centers. CoreWeave does not own all of their data centers. Iris Energy owns their data centers, and also in their Canada, the portion in Canada, they do own the energy supply for their data centers as well. Now, the Canada version is not the biggest portion of this company, but I like Iris Energy because it has more vertical integration than other companies possibly on this list. So that's why I like Iris Energy. Now, in terms of the whole sector, I mean, this is pretty much all the same chart. We don't have to go through every single one of these charts, right? All you need to understand is that all these charts look the same and they're all doing the same thing. Huge consolidation right now. So is it a good time to be building some longer form positions if you are bullish on these companies for a long-term thesis over the next 2-3 years? Yes, these pullbacks are nice and a more manageable valuation currently, but always keep in mind, they will be a little bit bumpy because the revenue streams are only really coming in a big fashion come 2027, 2028. They'll have a lot of capacity online by next year, but all these data centers are still being built out right now. So these are still in daily downtrends, all of them for the most part. This one, NBIS as well, right? Still in daily downtrends. You need to see them recapture some of these trends, but is it a good area to accumulate? Yes, but will I sit here and say, that's the bottom, go all in on call options? No, but it's an accumulation phase. Now is where we want to reaccumulate some positions. We can drop a little bit further, but it's nice to see that we are going through this consolidation phase in a lot of that segment of the market. Now we need to talk about some other people's favorite meme plays, such as Open Door. Open Door is a rate cut play, guys. So if you're looking to accumulate here, only risk what you're willing to lose in this company. I get it. Some people compare it to Carvana and things of that nature. Next stop for the next rally is probably going to be into the teens, low teens, 14, 15 type of thing. If you're looking to accumulate, now is not a bad time to be doing it, but just keep in mind, never risk more than you're willing to lose. This one will move a lot with the rate cut odds, which is why it's been moving so wildly in the past, few days of trade off of these Friday bottoms. So I'm not in Open Door, but best of luck to all you guys that are. These memory plays, SanDisk, man, it's very tough to get behind these, right? Very, very tough to get behind these. I will admit the valuations are not crazy on this, and names like WDC, I'm not personally playing them. I'm not really playing memory. I've made my money in Micron using memory chips there. If I had one name to buy, it would probably be Micron, even at these levels, because the valuation is still manageable and they're just a more well-diversified company with a lot more revenue power behind it, right? So my favorite play there is Micron. That being said, would I be buying Micron full send right here? No, but would I maybe be nibbling on Micron? A little bit, but we're so extended, guys. This is what I mean, right? The time to buy Micron, we talked about it so much on the channel, was down here and down here. So hopefully you guys have made a lot of money on this stuff, right? Up here, I mean, the fundamentals still make sense, but it's the technicals, right? The technicals are just so overbought that it's tough to commit with very large size up here. So if we already have positions and we want to add to them a little bit more on this consolidation phase, it's okay. But starting a massive position on Micron up here, thinking that you're catching the company cheap, you're not catching at the best technical level, right? Can the stock keep going in waves over the next 2 years? Yeah, and if you're buying it with a longer term thesis, that's fine, but you'll have to sit through a couple of these waves overall, keeping that in mind, right? So they're not my favorite place to chase in the market right now, but I get why some of you may think that it still makes sense. Just play small, right? You guys know me at this point in time. I look for confluence between technicals and fundamentals. So we were waiting to accumulate some of these trades. Even me, I'm building a share position on Iris Energy. I've been waiting for a pullback like this for a while, right? I'd rather play the pullback when nobody wants it than all the way up here when everybody wants it and we're just super extended coming into earnings, super overbought conditions. I'd rather play these technical pullbacks, flush out a lot of people, right? And then I'll get in and I'll kind of buy those shares for the long term. Broadcom 11% day. And the only reason that they're up, guys, is obviously because of Google's TPUs, because of their Gemini 3 model. So Broadcom never really lost the trend right here. Beautiful expansion right now. Broadcom, I mean, we did them after their earnings in September, right? We found them to be in around the 300 range, a little bit pricey. And now they're at 377. They're still a little bit pricey. So Broadcom, solid company, but it's not my favorite company to buy up here just because of the valuation. And also, we're very stretched on the technicals. It doesn't mean that it can't keep running, but we talk about confluence in this video a lot, right? There's so many other plays that are showing you guys good confluence between technicals and fundamentals, right? This one is overbought on the technicals and overbought on the fundamentals as well. It's trading very rich. So is it a good hold if we already have some? Yeah. Is it a good buy up here? New position? Arguably not. So keep that in mind. That's what I mean, right? It's all about nuance. And I'll never sit here and say it can't run more. Of course it can run more, guys. But are you getting the best risk-adjusted returns? That should always be the question. It's talking about risk-adjusted returns. You want to minimize the risk, of course, right? Because when a stock moves higher, the risk isn't lower. The risk becomes higher, of course, right? Moving on to HIMS right now. HIMS is a play that I actually like down here, right? Bouncing off the lows a little bit. Down here to sell some put options, 36 down to 30. Not too bad, but also to accumulate some longer-term shares. Daily oversold condition, a huge monthly retracement and monthly downtrend, just really cooling off all of that early bullishness that we had this year. Around 35, the valuation makes sense. So this one would be a buy and hold play for me. Buy and hold for the next 2-3 years. You are going for market cap expansion. It's trading at a 3 price to sales. Only a 3. If it's a company that you like their subscription model, you like that what they're doing, we can buy here, but we have to buy with a very long-term time horizon because, I mean, we're kind of swimming upstream, right? The bears control this short-term time frame. The bears control the short-term, the medium-term weekly time frame as well, right? But we are into support and does present a nice longer-term swing trade opportunity in my mind. SOFI we talked about. I guess I'll talk about Lemonade. Lemonade is a buy if once again you have a 2-3 year thesis, right? Because we are stretched here on the technicals, right? Very far away from a technical pullback. Arguably the last time to buy was down here, right? 55 down about 47. Lemonade, what you're looking for the long-term thesis, guys, is very simple. All you're looking for is the projected year of profitability, which are about a few years away from EPS positive, and the revenue is ramping very nicely at this current stage. So Lemonade, it's a smaller cap company. It makes a lot of sense. AI plus insurance, who doesn't like that? The last time I was playing Lemonade was all the way back here, but I'm revisiting this opportunity, okay? Because it makes sense for a longer duration swing trade, right? Accumulation, right? Maybe we buy some here. Maybe we buy some if it has a bit of a retracement. They've been doing really good on earnings recently, right? But the last thing that I want to feel like I'm doing is chasing something, you know? So that's everything for Lemonade. I mean, there's so many names on this slip here, but I guess you guys get it, right? AppLovin pulling back in a very nice way, not quite into the 12 EMA, but we were talking about this one into last week, right? Very, very solid pullbacks right here. Not quite daily oversold, but if AppLovin is a company that you wanted for the long term, not talking about swing trades, because swing trades, you got nothing, right? You don't really have, I mean, I guess there's these guys, right? There's really nobody here. You filled the gap. It's very tough to just say, yep, I'm going full in for a swing trade right there, gap fill, and just going for the long. You can try, or you can just wait for a recapture of support and a daily uptrend and a more clearly defined stop loss area. That's what I do when I'm swing trading these things. But long-term portfolio, we were talking about it. It was pretty decent, man. I was waiting for low 500s on AppLovin to be able to say that this one is a good bid. And it actually was at 620. The valuation was up there in the 40s, you know, minus 20% from there roughly, which is where we did at the low 500s. It was good, man. It was under a 1 peg and like low or mid 30s forward price to earnings. Not too bad at all for AppLovin down there, but now at 559, it's kind of just okay, right? But very decent company overall. Same thing about Robinhood. Robinhood, we were talking about it, low 100s. We actually came down there last week, 106, at about 99. Not a bad location to pick up some more Robinhood shares if you're bullish. Weekly, still a downtrend. Daily, still a downtrend. They'd have to do a lot of work to kind of reverse this, just like Palantir. But is it a nice accumulation range if you guys are bullish on the company long term? Yeah, because now the fundamentals after their earnings make a lot more sense at 110, right? And also we had a very nice technical pullback, not quite coming into the 12, but very close, right? At least you're closer than just buying it up here, pure FOMO. We've cooled down the monthly timeframes, cooled down the weekly timeframes as well. Everything is now cooled down, and the valuation as well has cooled down. So not the worst opportunity out there. Just apply the logic that I've been talking about on all these names to any of the other names that I'm not talking about today. And lastly, talking about Grab. Grab is actually one that I'm really interested in, man. right? It's a nice monthly uptrend, monthly pullback right here into support. We didn't close below it. We came below it, didn't close though. 550 down to about $5. Very, very interesting level here on Grab to possibly play for the long side. I am a fan of playing this one, but once again, it's accumulation for some longer term shares because your short-term bears control the timeframes right now. I have two things on Grab. I have leaps from recently, from Friday, as a matter of fact. I have leaps from Friday, and I also started buying some pretty decent shares for a longer term, 1 to 3 year expansion thesis on this business as they continue to dominate in Southeast Asia where they operate there. And the last one, I'll give you guys another free one, TMDX. Solid, very solid, okay? So we have a few things going on right here. Nice breakout pattern, breakout, retest of the tightening wedge rather. Beautiful breakout, monthly, beautiful monthly higher lows. Going for the breakout as well. It's a $5 billion company. They're scaling revenues really well. They're flipping to profitability. And this is what I mean when I say the stars are kind of aligned, technicals and fundamentals. They're flipping EPS positive, revenue up and to the right, very solid. They're expanding a few different things. Number one, the kidney business. This is an organ transportation business. You guys have probably heard about it before, but I am starting to build a multi-year thesis position on this company. I think they'll do really well expanding into the kidneys market, which is the largest organ transplant market in the world. And they're also, since they've proven their business model in North America, they're now also starting to expand internationally with projections to expand into Europe by next year. So it could be a very interesting play, longer term thesis. When I play healthcare, I don't play many healthcare names. Usually I stick to medical devices or medical supplies. This is another interesting one. Probably another of my favorite healthcare companies, that and ISRG. Remember I was talking about ISRG being buys down here? We crushed those. TMDX looking good for the technical breakout, but also the expansion of the longer term thesis of this business. So just a few names conceptually that I'm thinking about. We talked about many names. It's impossible for me to cover all these names, but as long as we cover the broad themes, such as the neo cloud providers, the memory providers, my thoughts on those, some names like HIM, some names like Lemonade, some names like Robinhood, right? Kind of covering all the bases. Some of my favorite plays that were on the highs today as well, but there's many more. Like there's Reddit. We were talking about Reddit being a buy down here, low 180s after their earnings. Sure, it's a weekly downtrend, so you don't know if the bottom is set, but at the end of the day, it's just monthly consolidation. So if we were looking to buy some longer term Reddit shares down there, it's not bad. We covered their earnings. They were fairly low at 200. So I was saying 180 to 175 would be a no-brainer if Reddit is your style of company, et cetera, et cetera, et cetera. Rocket Lab as well. Rocket Lab completing the 12 EMA backtest. So if you're a fan of Rocket Lab, we covered them after earnings about a few weeks ago at this time, right? Their forward projections were a bit high, but they will be using, or rather they will be coming online with a Neutron rocket second half of 2026. If you guys are in this one, you're in it with a long-term thesis. Again, 2-3 years. Now they gave you a nice technical entry, right? So not too bad to maybe buy into Rocket Lab, or if you sold it up here because you maybe saw the pullback coming or whatnot, not a bad location to be reaccumulating some Rocket Lab if this is your style of company. I'm not saying it can't drop more. Of course it can, right? But now's where we kind of start want to rebuying this name if we have a longer term bullish thesis, now that we have some decent technical consolidation from the top, man. I mean, that's like a 45 to 50% pullback. So fairly decent pullback, all things considered. That's everything at the top. Now, names at the bottom, right? I will not play apparel brands. I'm just not going to do it, right? Consumer discretionary spending. I'm playing the easy narratives, the AI narratives, et cetera, et cetera, et cetera, right? I'm playing a lot of tech right now, but what I'm not playing is anything consumer discretionary, right? You can make an argument that maybe now is the best time to play them. Names like Abercrombie and Fitch, names like Kava, names like Decker's Outdoor Brands, names like Restoration Hardware, names like Starbucks, now pulling down from the lows, names like Dutch Bros, names like Celsius Holdings, names like Nike, shall I go on? Names like Lululemon, right? Names like Chipotle, right? Names like, I don't know, Cheesecake Factory that have pulled back tremendously. Now you might argue is the time to build some positions on consumer discretionary. And that would be a fair argument. However, you have to have a very long-term thesis, man, because the consumer discretionary spending narrative is not an easy narrative to turn around, right? The tech narrative is very easy. That narrative never died. It's just you get a short-term glimpse of some bearish points of view here and there, which kind of makes the whole sector pull back in a big way. But the AI megatrend is still here. The spending is still there. This consumer discretionary spending, the spending is not there. These companies have revised their earnings to the downside, right? They've pulled their guidance lower. As a result, this is a fundamental and macro problem. The AI trade is not a fundamental problem. No, the money is there. The earnings per share are there. The profits are there. It is not here in a lot of these consumer discretionary names. So, although you can make the argument that now that they're crushed, it might be the time to bid. Well, yeah, but I hope you have a thesis that you're waiting for the recovery of the consumer, which may only come at some point in 2026. And then you're going to have to wait for positive earnings and whether those spending numbers come into these respective companies, right? And then again, which ones do you choose, right? So I am not playing consumer discretionary right now just because the narrative is currently unfavorable. I would rather play the favorable narrative on things that are pulling back in a big fashion that still have strong fundamentals, like AMD or like NVIDIA or like all the other big tech names we talked about. I'd rather play those pullbacks than sit here and say, yeah, I'm going to try to buy this multi-year low of Chipotle. And for sure, the stock price is going to moon because their same store sales growth is going to come back to what it was back in 2023, 2022. You know, it's a very tough thesis to get behind. So I'm still going for the easy trades. And maybe eventually when we get some indication that the consumer is better off than they've been in the past year, maybe then we can start playing when we actually get some weekly uptrends back or some monthly trends back on some of these names. Maybe we can play that for the re-expansion of the consumer, which could be a multi-year thing. But as of right now, it's still very dicey, which is why names even like Costco's done nothing all year because consumer discretionary sentiment right now and there's just a lack of retail interest in these names. There's arguably also a lack of institutional interest in these names. And as a result, these names have just by large and by far done a whole bunch of nothing. So no, I'm not buying any fast food restaurants. No, I'm not buying any apparel brands. They're low, right? And even a name like Elf Beauty, which is the more resilient name in a very tough demographic right now, which is beauty, right? Cosmetics, even that's been down. Elf Beauty is arguably the only one that I'm building a position in into the future because small cap companies still with very good growth numbers, but that didn't save them from a huge decline and it didn't save them from exposure to tariffs either. So a lot of these companies have negative narratives around them that are not easy to fix. And it may take some time. So if you are positioning, I'm not saying don't position. I'm saying if you are positioning, you have to get into it and tell yourself like, listen, this may be a bumpy path for the foreseeable future, but you're willing to kind of sit through that bumpy path now that a lot of these names have sold off by a ridiculous amount, right? Maybe we're closer to the bottom than not in terms of stock price, but in terms of rallies, big rallies like we've seen previously when times are good, well, those may still be a long way away. So keep that in mind if you're thinking of anything consumer discretionary at this current time. And that wraps up our video for today. Hopefully you guys enjoyed. If you did, consider dropping a like. So don't really have time for the portfolio now, guys. We're an hour and 15 deep. I'll try to do it tomorrow. Tomorrow, we may not do the biggest gainers and losers because now you guys know my thoughts across all the different narratives and segments of the market. So tomorrow, we'll probably do a portfolio recap or on Wednesday. That being said, that's everything for today's video. If you guys enjoyed it, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these videos every Monday to Friday after the close. Sometimes not on Friday when I'm busy with family and friends, but most Fridays. And in other news, if you guys have any comments, if you would like to leave a comment down below in terms of your thoughts on anything that I've said in today's video or your impressions on the market or some names that you are possibly looking to trade or invest in, we would love to hear from you. Definitely leave me a comment down below. That is everything that I have for you guys today. And for the Discord, I'll be doing it tomorrow. I'll be doing a Black Friday special for the Discord. Keep in mind, our Discord group, over 300 members. We trade the markets every single day. I'll keep this short and sweet. Trade the markets every single day. You get access to all my trades in real time, our private morning live streams for about 2 hours, all my educational content, 15 hours of educational content, technical analysis, fundamental analysis, my trading strategies. You can chat with us in the group as well. You get all of my watch lists, all of my fundamental breakdowns, all of my charts. You can copy paste them. Tomorrow, I'll be doing a Black Friday coupon code, which will run through Saturday. So I'll do a bigger presentation on the Discord coming tomorrow. So if you're looking to possibly join the Discord with us, well, you may as well wait at this point until tomorrow for the Black Friday coupon special, right? That I'll be putting out tomorrow for a discount on your first month off. If you wanted to come try it out and see if you like our Discord service. So that being said, watch out for it tomorrow. But for now, that's it for me, guys. Take care. Love you all. Hopefully you're feeling much better than you were at the same time last week. And hopefully today's video and last week's videos brought you a bit of clarity to kind of navigate these very volatile times. So take care. I'll see you guys in the next one. Peace.